Despite remaining 4 consecutive days in the green, the Sensex and Nifty opened down this morning, fully anticipating an interest rate hike of 25 basis points by the RBI. Financial analysts also expected the same. But the RBI governor had other ideas, pausing the spate of rate hikes after 10 months.
If I have to characterize today's monetary policy in just one line, I would say as follows. It's a pause, not a pivot. Number 2, there has been an effective rate increase of 290 basis points over the last 1 year, including the SDF 40 basis points rate increase.
The pause brings to stop the unprecedented fast pace of rise in interest rates in the past 1 year. 6 rate hikes in a row, bringing the repo rate to 6.5% from 4% since May last year. Since the Russian invasion of Ukraine last February, inflation has been the biggest policy threat to central bankers around the world. Though price rise has moderated, it still remains too high for comfort in most countries. The UK is witnessing an inflation of 10.4%, while Australia has a figure of 7.8%. South Africa is at 7%, while the India clocked in at 6.44% in March. The US is grappling with a relatively steep inflation figure of 6%. China recorded a 1% inflation.
The MPC remains watchful and will not hesitate to take further action in its future meetings as may be necessary. So, the job is not yet finished. 4. Given that there is overall macroeconomic and financial stability, our priority continues to be price stability.
The pause in the rate hikes gives a breather to the Finance Ministry as well, a fact acknowledged by Nirmala Sitharaman during a political visit to Bengaluru.
Well, RBI has taken a good call, I think.
The RBI, meanwhile, expressed satisfaction at the pace of inflation, which has tempered from a high of 7.8% in April last year to 6.8% in October and further to 6.4% in February 2023. For this financial year, the RBI has forecast an inflation estimate of 5.2%, well within its comfort range of 6%. The RBI, however, warned that the recent spate of unseasonal rains could play a spoilsport.
The impact of the recent unseasonal rains in some parts of the country, however, needs to be watched. Global commodity prices have moderated significantly from their heightened levels a year ago. As our surveys point out, cost conditions have somewhat eased. Inflation expectations of households have also eased down. On the upside, adverse climatic conditions are a risk to the future inflation trajectory. Milk prices are also likely to remain firm going into the summer season due to tight demand-supply balance and fodder cost pressures. The rising uncertainty in international financial markets and imported inflation pressures need to be monitored.
The tightening in the monetary policy had raised fears of hurting economic growth. The RBI governor conceded that there has been a slowdown in private consumption, probably due to high borrowing costs and inflation pressure. The RBI has forecast GDP growth rate of 6.5% this fiscal versus an estimated 7% in 2022-23. There are other threats to the economic landscape as well. OPEC has cut crude oil production, sparking fears of higher fuel prices across the world. The recent banking crisis in the West can still have an impact on the Indian banking system, and the funding winter across the world may yet spread some chill in India. Bureau Report, Business Today Television.
The RBI governor also addressed the recent banking troubles in his monetary policy statement, assuring the nation that India's banking system was unaffected by the crisis. Governor Shaktikanta Das also addressed several other issues. Listen in.
2023 began on a promising note as supply conditions were improving, economic activity remained resilient, financial markets exuded greater optimism, and central banks were steering their economies towards a soft landing. In just about a few weeks during the month of March, this narrative has undergone a dramatic shift. The global economy is now witnessing a renewed phase of turbulence with fresh headwinds from the banking sector turmoil in some advanced economies. Bank failures and contagion risks have brought financial stability issues to the forefront. This volatility, the banking and non-banking financial service sectors in India remain healthy, and financial markets have evolved in an orderly manner. Economic activity remains resilient, and real GDP growth is expected to have been 7% in 22-23. Nevertheless, we are keeping a close watch on the banking sector turmoil in some developed countries. In this context, let me once again recall Kautilya's wisdom, which remains relevant even for today's world. And I quote, "In the interests of the prosperity of the country, we should be diligent in foreseeing the possibility of calamities, try to avert them before they arise, overcome those which happen, remove all obstructions to economic activity." A compensation mechanism for delayed updation, rectification of credit information reports. 2, a provision for SMS, email alerts to the customers whenever their credit information reports are accessed. 3, a time frame for inclusion of data received by the CICs from credit institutions. And 4, disclosures on customer complaints received by the CICs.
If you like the video, do like, comment, share and subscribe.